Jay Woods of Freedom Capital is here with us. He's a CNBC contributor. So you're just saying it's going to be an interesting hour into the close. But as a tell for what you think equity, Ed Yardeni is in those saying, look, we're priced for short war. And I think everyone's watching this to see, like, are the markets casting a vote for a shorter, perhaps less messy conflict?
I believe that to be 100% the case. The news coming out of the Strait of Hormuz now could be defended. The biggest concern was, one, boots on the ground. That's a concern. How long will this war last? And then, two, the disruption in oil. If the Strait is closed for an extended period of time, and I would yield to Brian's expertise here, that is going to drive up the price of crude, which is the biggest tax on the U.S. consumer. So if we can get anything to lessen those fears, we're going to get a rally. And this has been a bend but not break market. As a technician, watch that 100-day moving average, 68.30. We're 10 points below that in the S&P 500. We have a heck of a reversal. That last hour of trading, most important hour of the day, it's going to be very telling as to if we can actually get above that 100-day, or does that old support become resistance going into the next few days as this continues on? Yeah, no, and so you mentioned kind of, look, I think the truth is we're all gaming this out hour by hour with new information. Yep. If this report or this idea that the Strait's going to be defended is denied and things look worse tomorrow in the oil price, you have to say the oil price looks a little bit like a coil, like it's been coiling for a move. And maybe this is it, and maybe it's over now. But what happens if it keeps going? And not just because of this conflict, because we're in the midst of a massive global CapEx cycle where we seem to be short of a lot of physical stuff. Well, you said the right word, coiling. This whole market has been coiling. You look at the range in the S&P 500 this year alone, it just gets narrower and narrower. And we're looking for that break or that breakout. Last week, we talked about NVIDIA. That's finally going to get us over. Their earnings were great. We didn't get that follow through. Now oil is going to take us lower. It's still not. So we are waiting to see. SCOTUS was supposed to take us lower. We held off to that. So this is a very confusing market. It's been one of the most volatile markets, the greatest trading market for those traders on the desk. They're loving this volatility. But I can't say with certainty which way we're going to go. So I'm going to go back to individual stocks and earnings. And I look at something like Target. It got lost in the shuffle. Everyone's talking about Target. Was it really that interesting? What a turnaround story they are starting to make. The new CEO, whose last name I cannot pronounce, Fidelki? Yeah, he's doing a great job. His first name's Mike. I don't know you, Mike, but he's got the turnaround coming. And from a technical point of view, all right, you go where the puck is going. And right now, risk-reward, Target looks good. Then risk-reward, let's follow Broadcom. Let's follow CrowdStrike. These names that have been beaten down. When it comes to Broadcom, symbol AVGO, that stock is at a crucial threshold, just like NVIDIA was. NVIDIA was a tell to me yesterday. That key reversal held the 200-day moving average. I think the Mag 7 are going to hold us up, but can they break us out? Right now, we continue to tread water. I take profits in those energy stocks that have had a tremendous run, and I look to put work. And where I want to put money to work right now are those beaten down technology names, the IGB. Software. That's software resilient today. And what's getting crushed? SanDisk and Micron, the two biggest stocks of the year. So money is not final question, panicked. And I know we don't know until we know, but is this just a one-day or a short-lived kind of counter-trend move? Does the trend so far from Jan until, let's call it March, reassert itself? Yeah, the trend has not changed yet. It is at a delicate spot. If this prolongs, if there's another surprise, heavens forbid something happens on American soil, then maybe that will be the panic. But overall, the trends are intact. Earnings growth, which you talked about in the first segment, is there. So this market has been resilient. I think it's going to go higher over time, but we may go sideways for a lot longer with all this uncertainty. Yeah, it looks like the U.S. consulate in Dubai just got hit by, Iran at this point feels like it's just lobbing stuff up. And I want to be bullish on this, but I will say, Jay, that we've got the Strait of Hormuz, and I've told everybody this is the most important map. It's not my opinion. Talking to a lot of smart people, insurance executives, shippers, whatever, all the last couple days. Yeah. However, Iran hit the Ras Tanura refinery, biggest refinery in Saudi Arabia. They hit Qatar Energy's LNG factory. So even if the ships are flowing, if there's no energy that can be produced, at least at scale, what if energy prices keep going up, even if the Strait of Hormuz is, quote, and I hate that term, reopened? That's the problem, because what is the biggest... Well, that's the risk. You're a trader. You analyze risk. Yeah, well, that's why I'm kind of mumbling through this segment. We're at that threshold, and I'm going where there is activity. I'm not going all in on equities right now because I don't think that this is resolved. If crude stays elevated for a long period of time, it's the biggest tax on the consumer. Now you're going to go back to the Fed. We're going to focus on, hey, new Fed chairman, we want to lower rates. Well, we have inflationary concerns because of the price of oil. So these next few weeks, how they play out, are crucial, not just for the market, but for Fed policy and the economy going forward. And that I don't want to make light of. So I'm not going to come in here and say, yes, it's time to buy this dip when there are serious concerns going forward. So you be nimble, as the great Art Cashin would always say, and you trade this market. And right now, I think there are opportunities in some of these beaten down software names. And if you have profits, which thankfully, knock on wood, I had a few with ExxonMobil and some of these energy names, taking a little off the table and just waiting this one out.